Thursday, June 22nd, market analysis, Stan Ehrlich. Sorry I'm so late today. 12:11 California time, 45 minutes or so left until the market closes. I usually start these recordings around 9:45, 10 o'clock California time, so a couple hours late. Okay, and I always start out with the stock market indexes, and I've got to change to that window or workspace. Here we go. And with the S&P 500 I start with, we have a rally at the moment. In fact, the rally is after it makes a new low for the previous 4 days, and almost a new low for a couple more days after that, before that. Now, at the moment, we're up a point and 1500ths. Nothing to speak of. Very minor amount. But it's not necessarily the amount. It's the way that the market's doing what it's doing. Again, the amount can be very important sometimes, but not always. We're close to having a bullish engulfing. We don't. I kind of hope we don't have one, because that would imply the market's going to go up a little bit more. There is a gap, remember, from earlier this week, right there around 438 and 60, 438.60 approximately. Very small gap, but there's a chance that it would get closed, rally up there, and then, it's only 2.5 points more, and then turn down and start to do what I'm still thinking it's going to do, and that is to come down to about 423 and close a gap that was created back on June, at the very beginning of the month, June 1st and June 2nd. And that was a very profound, major bullish gap, because it started to make new highs for many, many months, convincingly. And then it kept going and made new highs for way over a year now. So I think the overbought condition is still the most important recent technical situation, and that little gap, tiny one. So I'm looking for more of a downside correction to close the gap on the S&P. This is not changing the long-term trend in any way, shape, or form. It is simply a correction in a bull trend. And if we can get down to 423, I expect it to bottom out in that area and turn up and make new highs for the whole trend and keep on going up. This is the bull market of 2023. Same comments stand for the DIA, the Dow Jones. Minor differences. The gap would be filled at 332, and we're trading at 339 at the moment on the DIA. We've made new lows for a few days. Minor support. We bounced off this morning. We're currently trading a very small amount lower on the day, a few ticks, while the spider is up 1.25. The QQQs are a little bit different story, but not much. We do not have a bullish engulfing yet, but we're awful close. Minor new highs will generate an outside up day, but it doesn't have anything to do with the ER buy or sell signals, which I have to tell you again, with the QQQ, you can't do better. We have a bearish signal at the top of the bull market since COVID, which was November 22nd, the high day, all the way down to the low October 13th, where the Qs and many other indexes had a gigantic bullish engulfing buy signal, and I screamed bloody murder, even set up the situation before it happened, and when it happened that day, screamed bloody murder, it was the bottom. So far, so good. So this downside correction in the Qs can come down to 333 approximately, and go right back up again into new high ground. I don't really want to have anything particularly bullish to happen at the moment. I don't believe we're going to have a really big bull market unless we wash out a little bit of the longs at the moment and have that correction. So basically, that's the stock market indexes. I'll mention the Russell 2000, as I have for a week or two now. It rallied up into resistance, the green resistance area that I've drawn on the chart. It also had a bearish engulfing sell signal on the high day. And that for the Russell 2000 was June 14th. Today is the lowest low since that high sell signal. And we're still lower on the day by a modest 1 point. Certainly not much. Nothing that's going on right now seems to be particularly profound for me. It's just a little bounce after a few days down, and they weren't down very much. So let's see if I can get more of a downside correction very soon, and then up, up, up and away. Let's look at the futures. I notice immediately that we have a new sell signal in hogs. We'll get to that in a few moments. That may be the only one at the moment for today. So I start out with the E-mini, which is a futures contract, but also stock market indexes doing basically the same thing, of course, that the spider's doing. So I'm looking for more of a correction. In this case, there's no gap to fill, and that's because it trades significantly different hours. You know, it's almost 24 hours. So I'm looking for more correction and then higher levels. Next, interest rate futures, bond futures. Coming down today with a little bit of an outside down day, nothing particularly super aggressive, but I'm a little disappointed that it wasn't able to get through some resistance here and get up into that range above 129 or into 129 and higher. Then I think it's going to break above 135 and be on its way up for a big, 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 big move over months, if not years. And that probably started already way back in November. Now, the bull trend line has been holding very, very well the last few weeks. It may hold again. It may not. But there's nothing here so far that's causing me to turn bearish, even a minor amount. And if the trend line holds, we'll be squishing ourselves up against resistance into that trading range and continue upwards. So we'll see in the next hours and next couple of days whether that trend line holds for the moment. Even if it's broken, there's support below the market, and I don't think I'm going to see anything big on the downside. Next, 10-year notes. Same commentary almost exactly. Didn't quite get down to its trend line, like the bonds bounced off of several times in the last couple of weeks, but close. And it's close to making a minor new low. Again, we'll see what happens on this little dip, which may not necessarily make any lower lows and turn right around and go back up. Next, crude oil, energies. You know I'm bearish, long-term bull trends, looking for some huge major downside breakouts. That would be, in this case, below 65 for crude. Coming down pretty good today. So there's a good chance it's going to start dipping below 66 or 67 flat and approach that 65 and break that one. Both could happen in the same day. Next chart, heating oil. A little downside correction after getting a little bit stronger than I would have expected, slightly above the resistance line I had drawn, but not much. Basically in an area of resistance, and this could be turning down now. It almost got overbought, but not quite. Next, 2 days ago, we had a natural gas sell signal, bearish red ER sell signal. Yesterday, we went short. It closed with a very small loss. This morning, we still have that trade, and it's a little tiny bit larger loss at the moment, but very, very small. We're short at 2.58, currently trading at 2.6 flat almost exactly. So very tiny. Next chart, and I'm bearish, is gold. We had a buy signal that worked modestly back on May 30th, and another one a couple of days later that did not work. Now we've got new lows and new low closes. The more downside pressure and the fact that we've broken for days now a pretty good previous bull trend line and no nearby support, it leads me to believe that we're going to be able to come down to 1849, 1,850-ish. Maybe take another week or two. So I'm modestly bearish short term And there's a chance we could be building much more of a major top formation, but that remains to be seen. Silver, we got the low on March 10th. We got both highs of a double top. Don't try that at home alone. The minimum downside objective was reached on that double top formation, and we got a low with a bullish engulfing buy signal that rallied for 2 weeks plus. Now we've broken all of the lows. Unfortunately, we didn't get a sell signal at the top. That does not mean we're still long. You know we have a trailing stop that comes up very quickly and very tight across the bottoms. There's no way that we're still long. And that was definitely a very good buy signal that made some good money. You want to know the details? Call me, or rather email me, info@ersignals.com. info at ersignals.com. So we're now oversold. Gold deserves a chance. Well, silver deserves a chance of a little rally, but we might dip off another couple more days into a little bit heavier oversold conditions. So I'm looking now for a bounce very soon, but probably going to make new lows after that, and looking for the continuation, probably down to test 20.2 ballpark. Next, platinum. Yep, we got the low again back in February on all three precious metals. We got the bottom, February, early March. Up here, we have a sell signal, but it didn't work very well. It's not in the right place. That's in the right place, the top of the market. That's in the right place, 2 days off the exact top. That's the top. That's almost exactly the top. Those are great sell signals, 4 of them, and a great buy signal, and a whopper of a great buy signal. So we've had many great signals. The last one, sell signal, last sell signal, didn't work very well. And the last buy signal also, for that matter, didn't work. Last 2 didn't work. Very oversold now, getting down in the teens, and that is danger territory, especially if it gets down to like 10 or lower, which is rare. I almost guarantee, and I can't use that word, used to have a government license for 30 plus years, a commodity license and a stockbroker's license also. Then I was legally bound not to give you those kinds of words like I guarantee and so on and so forth. That's, of course, a foolish word to use in any circumstance when you're talking about the market, because you can never make it do what you want it to do. You always have to move with it. So you never know 100%. But very, very low RSIs do more often than not cause damn good rallies in a bull trend or a bear trend. And we're getting to that stage almost. So I'm turning friendly short-term on platinum only because of oversold, and we're testing support in here. Next chart, high-grade copper, almost the exact opposite, at resistance, rally high, overbought, probably going to start to turn down. Next, grain markets, soybeans, overbought conditions I've talked about since it got overbought last week. It went up a lot more. And the high yesterday, I said at the time it was happening that it could be the high of the rally. Bingo. So even though it closed near the highs, that doesn't matter. Well, it's to be taken into consideration, but it is frequently not the major factor. It stopped almost exactly at the highs that we saw back on February 10th. Nope, 13th, February 13th. And now we're down, plus today's low is lower than yesterday's low. And I do think we've started the downside correction. And I verbally pegged the high of the rally to the tick within the hour or something like that. Pretty damn close. Next, soybean oil. Same kind of situation, in resistance, overbought condition, started to drop dramatically yesterday, and today at the moment we're a little bit higher, but after it went down quite a bit more. So I'm looking for a little bit lower levels. RSI is very neutral at 55. Minor bounce today. I'm looking for a little bit lower levels. I'm bearish, intermediate, and longer term. Next, meal, soybean meal. Overbought at a resistance level almost exactly like soybeans. Stopped cold, turning down, looking for a test of the lows at 387.86 and lower. Next, corn, very overbought. Started to come down. I think we've seen our high, and I'm looking for a move back down. Okay, it's not very far at the moment, at least 647, and I think 631 looks also very likely. So 31 to 47, and that's not very far away. If it can't hold 630-ish, then I think we got another sizable drop to go. But I'm short-term a little bearish, otherwise bullish on corn. Next, wheat came up to the resistance area almost exactly today, and it's overbought. Two significant reasons why this is it. I think today could be a rally high day. No gaps to go back and close. That would be better. But overbought for several days at a very high overbought level at almost 90, plus the resistance level being tested. That's too good to be true. Yeah, I think this is just about to turn down and head south. I'm bearish all the way across the board, short, intermediate, and long term. Next, live cattle. We caught the market on the high day, June 7th. We have another sell signal a week later. That one is working very nicely also. It past tense. We've already seen, like yesterday, new lows for the move down lower than both sell signal lows. And today we have a little bounce. I don't think it's going to amount to much. Looking for lower levels right away. First level of support where it might stop going down, 164 and a fraction, and lower. Next, hogs, we've got a sell signal today. Today is an outside down day, bearish engulfing in overbought condition. That's it. As far as I'm concerned, the rally's over. The highs in the last 3 days are almost the same. They've got a little bit of resistance area they tested, not particularly profound. It could have come up a little bit more, but it didn't make it. And with this bearish engulfing red new sell signal today, as far as I'm concerned, that's a nail in the coffin. I warned you it was going to start going down when I started seeing yellow, and that was 4 or 5 days ago. So here it is, testing the low of 3 days ago, the low of 3 days ago already, and I'm turning bearish. Next, OJ and the exotics rally, trend is up, looking for higher levels. Don't have really too much to say. Probably going to get over 292. Give it a week or two. Next. Got overbought. Sell signal didn't work. Remember, just because it doesn't work, we don't lose much. And even if it didn't work very well, there's chances for profit potentials depending upon how you handle the signal. But I'll say it didn't work. Now, I obviously like the ones that are on the high of the rally, like that one and that one. That didn't work. Even this one worked okay for a couple of days, but it wasn't a particularly great signal. No big move down. But now overbought and a little slippage, and I stress the word little because I think it's going to come down probably to about 3,066 and more profoundly better support 2978. That's cocoa. Next is cotton, the rag. So big sideways trading range. I mean big, since last October. Come on. No breakouts, not much to say. Waiting for new highs or new lows for months for breakout levels or a new signal. Ain't got any of it. I'll wait. Next. Big down day for sugar. Double top I've been talking about since it got up to 26. Now it looks a lot more interesting. The level at which it's going to be a double top past tense and breakout to the downside is 2380. you get to and close below 2380, you've got yourself a double top that looks a lot like the silver double top, except I didn't get any red sell signals at the two turning points. The formation's the same. The way you handle a formation will be the same, but unfortunately, I didn't get any signals. Next, and that's it. We're back to E-mini. Have a great day. Talk to you tomorrow. Sorry, I'm so late today. Bye-bye.